It is Tuesday, March 30th, 2021. Hey, everybody. Thank you for joining me. My name is JJ. This is Bull, Boom, Bear, Bust. All right, Bulls and Bears. So we've got some news to report here. And again, today we're going to look at the signals and the signs of this economy possibly taking a big turn. Now, we talked recently about a lot of different things, including inflation, the ship in the Suez Canal. We didn't think that was going to equate to much. The ship has been freed from the recent report that I have found out. Even if it wouldn't have been freed, it wouldn't have been a drastic impact because most of those shipments were going to Asia from the Middle East. Now, it could have affected the price of other cargo ships because rental prices went up a lot when that stall happened, but we see that it got freed. So a lot of people did make that out to be a lot bigger than it really was. But what we really need to focus on, what we continue to focus on here, is the market propping, or the are the market makers, the monopoly men, going to continue to keep this market propped up, or is it going to be continuously lower and lower rates? Well, we're seeing a few signs here that we need to keep an eye on. And also, in addition to low rates, you have other actions which influence the economy and markets and jobs, such as multi-trillion-dollar stimulus package. Now, if it were not for the enhanced unemployment benefits, the moratoriums on the rents and the foreclosures, the stimulus checks being sent out, all the forgiveness programs and assistance programs, we would already see even more carnage than we're already seeing. But even now, with the record propping in these markets and in the banking system, right, unlimited currency, right, that has been vowed and promised to keep the banking system operational, we're still seeing a lot of people fall through the cracks. Here's a recent story. And this is here in California. Single mom loses home after confusing EDD policy change. So her unemployment benefits suddenly stopped. All right, and this is just one small example. You would see this in millions of situations, millions of cases across the United States, and just the simple stoppage of these benefits, unemployment benefits, stopping the bank propping up with all the unlimited, endless fiat currency that's been promised to the banks. All right, when the monopoly men, when the market makers, the money masters, when they decide that it's time, then millions of people are going to lose their homes, just like the single mom right here who lost her unemployment benefits. You see, the Main Street economy looks okay while this unlimited market propping and this unlimited backing is allowed. And some people say, oh, that's good, they're helping people. Well, it's not so good. Imagine you do everything, including feed your kids up until they're teenagers. They don't know how to feed themselves. You do everything for them. They don't know how to do anything. They can't tie their own shoes because you've done everything for them. This is the equivalent of what's happening now in the economy. There's so many people dependent on handouts and assistance that as soon as it stops, it's going to be devastation for tens, maybe even hundreds of millions of people when you look at the level of propping and the level of handouts that are being given out to people. Single mom loses her home. This is here in California. And here's a quote from this article. Quote, "The unemployment that was coming in was sustaining us, but then it stopped. I feel like a little kid again. I'm 51 years old. I have to rely on my parents for everything. I just wasn't able to pay any of the bills, wasn't able to buy food, wasn't able to take care of us like I should have taken care of us. Had to rely on my elderly parents to take care of us, which is not a good feeling." All right, now this woman is saying that they stopped her benefits because she failed to provide some documentation to the unemployment benefits. And you may say, well, she deserved it. That's her fault. She dropped the ball. But this could easily happen. And not just this, not it being the fault of the homeowner who loses their home, but benefits could just stop. What if the debt machine can no longer go into unlimited amounts of debt? All right, it's also not a good feeling to know that as a country, most of us are only fed and we only have food to eat because of handouts and assistance programs. You see, because once the assistance stops, once the checks stop being sent out, and once the spending stops, then you see job losses increase even faster. and you see more people drop out of the labor force because more people have to go on unemployment. You see a lot of the jobs that are coming back are, one, they're low paying jobs, but two, they're only coming back because the artificial spending that's being stimulated by stimulus checks, hence the name stimulus checks, right? They're stimulating the economy, they stimulate spending, and they stop a further implosion of the economy. All right, Bulls and Bears, before we wrap it up, let's take a look at what could be the trigger of the collapse. So when we see this 10-year yield get up into the danger zone, and we talked about this in a previous report, and it's going to be between about 2.25 and 2.5% if it stays there for a prolonged period, and it was this report right here where we talked about it. Then look out below, because that means they are going to begin to allow this propped up economy to start collapsing. So we did see a surge, a big rise in that yield here, back up to 1.72. We're still pretty far away from the 2.25 and 2.5 area, what we call the danger zone. We keep a close eye on that 10-year yield. This downturn could be triggered in the debt markets, and that's a way that the Fed, the monopoly men, that's the way they can implement or trigger this next wave of the downturn. They can trigger this without getting the blame. All they have to do is say, well, we lost control, sorry, we didn't see it, there was nothing we could do, we didn't have enough liquidity available, and other things they could just make up to kind of cover up for the triggering of this economic collapse. Right? We know it can go both ways. We know that they can continuously increase the propping up of the markets, bigger stimulus checks, more frequent stimulus checks, maybe UBI. That's not going to be good, because then we're going to have runaway prices. We're already starting to see runaway inflation with the gas prices, the home prices, the rents, the cost of food going up, insurance, energy, fees and taxes going up. Everything's going up except for a few small items. And that's bad enough. But if we just allow deflation, that actually might not be as bad. It'll be really bad for a while, but then fundamentals will then take over. And all these people that once couldn't afford things, couldn't afford rents, couldn't afford homes, will then be able to afford them because prices were allowed to correct. Things will become more affordable. But it's dangerous. Either way, it's going to be dangerous. Deflation, they pull back on all the propping and all the handouts. Devastating, but ultimately that'll be better. The continuous inflation, continuous stimulus and market propping, that's going to be the worst case scenario. And people that were sitting on cash are going to be left behind, because your cash is going to get further devalued. So that's why I would like to say diversify, try to have a balanced portfolio in case there is that continuous inflation. We don't know what the market makers are going to do, right? I don't have a crystal ball. I cannot see into the future. I do know that historically there has been boom and bust cycles, meaning something always usually comes in to stop the bubble, to pop the bubbles. But what happened in the past doesn't necessarily mean it's going to happen in the future. You might have heard the term, history repeats itself. Well, a lot of people feel like that's going to still hold true. However, anything can happen. Stay prepared at all angles. Don't be a victim of this banking system, which looks to enrich a few at the top and have everyone, the bottom 90%, maybe even more, maybe 99%, when it's all done, will be just dependent on handouts from the top 1%. And the market makers, the monopoly men, the money printers. Thanks everybody for watching. Let me know what you think about this. We'll talk to you very soon. Stay well, stay safe, stay prepared. Bye for now. Peace.